So what is a central bank? A central bank is an institution that produces the currency of an entire nation. Based on historical precedent, two specific powers are inherent in central banking practice: the control of interest rates and the control of the money supply, or inflation. The central bank does not simply supply a government's economy with money, it loans it to them at interest. Then, through the use of increasing and decreasing the supply of money, the central bank regulates the value of the currency being issued. It is critical to understand that the entire structure of this system can only produce one thing in the long run: debt. It doesn't take a lot of ingenuity to figure this scam out. For every single dollar produced by the central bank is loaned at interest. That means every single dollar produced is actually the dollar plus a certain percent of debt based on that dollar. And since the central bank has the monopoly over the production of the currency for the entire country, and they loan each dollar out with immediate debt attached to it, where does the money to pay for the debt come from? It can only come from the central bank again, which means the central bank has to perpetually increase its money supply to temporarily cover the outstanding debt created, which in turn, since that new money is loaned out at interest as well, creates even more debt. The end result of this system without fail is slavery, for it is impossible for the government and thus the public to ever come out of the self-generating debt. The founding fathers of this country were well aware of this. In 1910, a secret meeting was held at a J.P. Morgan estate on Jekyll Island off the coast of Georgia. It was there that the central banking bill called the Federal Reserve Act was written. This legislation was written by bankers, not lawmakers. And at the end of 1933, the gold standard was abolished. If you look at a dollar bill from before 1933, it says it is redeemable in gold. You look at a dollar bill today, it says it is legal tender, which means it is backed by absolutely nothing. It is worthless paper. The only thing that gives our money value is how much of it is in circulation. Therefore, the power to regulate the money supply is also the power to regulate its value, which is also the power to bring entire economies and societies to its knees. It's important to clearly understand the Federal Reserve is a private corporation. It is about as Federal Express. It makes its own policies and is under virtually no regulation by the U.S. government. It is a private bank that loans all the currency at interest to the government, completely consistent with the fraudulent central banking model that the country sought to escape from when it declared independence in the American Revolutionary War. Now, going back to 1913, the Federal Reserve Act was not the only unconstitutional bill pushed through Congress. They also pushed the federal income tax.